GAAP, A History of Accounting Standards. Welcome to our exploration of generally accepted accounting principles, GAAP, and their profound impact on financial reporting standards throughout history. This presentation will guide you through the evolution of accounting practices that have shaped modern business transparency. We'll trace GAAP's journey from its origins following the 1929 market crash through key regulatory milestones that transformed financial reporting. You'll discover how various organizations collaborated to develop the comprehensive framework we rely on today. Origins: why GAAP was needed. Stock market crash of 1929. The catastrophic market collapse exposed widespread fraudulent reporting and accounting manipulation that had misled investors and contributed to artificially inflated stock values. Great Depression aftermath. The economic devastation highlighted the critical need for reliable, standardized accounting practices to protect investors and restore confidence in financial markets. Government intervention. Federal officials identified lack of financial transparency as a significant cause of investor losses, creating momentum for regulatory reform in accounting standards. Push for standardization. By the early 1930s, momentum grew for developing consistent reporting methods that would provide accurate financial information across all public companies. Early milestones: building the foundation. Securities Act, 1933. Established mandatory disclosure requirements for public companies, requiring registration statements and prospectuses with detailed financial information. SEC creation, 1934. Formation of the Securities and Exchange Commission to enforce securities laws and regulate the stock exchange and securities industry. GAAP term coined, 1936. American Institute of Accountants first introduced the term generally accepted accounting principles to describe standardized practices. Private sector engagement, 1939. The SEC formally encouraged the accounting profession to develop and manage accounting standards. Key organizations shaping GAAP: FASB, 1973 to present. Independent organization that remains the primary standard setter for GAAP. APB, 1959 to 1973. Enhanced standards development but faced criticism over independence. CAIP, 1939 to 1959. Established the initial framework for accounting standards. Throughout this evolution, the SEC maintained regulatory oversight while allowing these private sector organizations to develop the technical standards. This collaborative approach between government and accounting professionals created a robust system that balanced regulatory needs with practical implementation concerns. Modern developments and expansion, global harmonization, ongoing efforts to align GAAP with International Financial Reporting Standards, IFRS, to facilitate global business. GASB formation. Governmental Accounting Standards Board established specialized GAAP principles for state and local governments. EITF, 1984. Emerging issues. Task force created to address new accounting challenges quickly. State adoption. All 50 states now implement GAAP for financial reporting, with approximately half requiring it at the local government level. Conclusion: the lasting impact of GAAP. Market confidence. GAAP creates a foundation of trust that enables investment decisions based on reliable, comparable financial information across companies and industries. Adaptability. The continuous evolution of GAAP standards demonstrates their ability to address new economic realities, technological innovations, and complex transactions. Global influence. While primarily U.S. focused, GAAP's principles have influenced accounting standards worldwide and continue to shape international harmonization efforts. As we look to the future, GAAP will continue to evolve to meet the challenges of an increasingly complex global economy. The foundational principles of transparency, consistency, and reliability remain as relevant today as when they were first developed nearly a century ago. Like and follow for more.